Hey EK fam, Aaron Kane here from EK Finance Group. So got some exciting news to tell you guys at the moment. So the 2nd of May, we're doing a version 2.0 for your Weinberg portfolio. So the new enhancements are coming out, been working on for some time. Really exciting to release this to you guys today. Now, I am in a hotel room in Boston, got my Red Sox top on. I'm here for the Boston Harvard study tour. So that was something that we won when we won those awards last year. So me and Zach are here in Boston for this week. So we're working with some professors over the next 4 days, doing some business courses and studies that I can hopefully bring back to Australia and utilise in our business. So really excited for that. But back to what this message is about, I wanted to get on the front foot and let you guys know that you'll receive a letter from North in the coming week or days, so around the 2nd of May, and it's going to talk about some changes to these Weinberg portfolios. So the Weinberg Group, as you guys know, it's me and 3 other guys, so we've all got our own businesses like EK, all financial planners. We've been using Zenith Investment Partners for some time now, and they actually help construct and give advice on the investments we have and you guys have got your money invested into in the Weinberg portfolio, so the fund managers to use. Now, for some time as a group, we decided we really wanted to take it to the new level. Technology changes, more efficiencies, business changes and things. There's probably ways to do things better as time goes on. So we're looking to improve these. So we decided that we wanted to have direct equities for Australian shares into your portfolios. For the Australian share part of your portfolio, we want to have direct equities rather than managed funds. So what that means is you physically have direct equities purchased into your super investments and pension accounts for you on your behalf. So rather than being an investment manager like Benelong or Ausbil or something like that, where they have then stocks under their portfolio, which you can't really see, we want to actually physically have the stocks in your portfolio, a lot more transparency. So we did about a 6 to 8 month process last year of researching the market and speaking about 5 other investment consultants, and decided on Elston Asset Management. So these guys, let me show you, I'll make my screen a bit small, Elston Asset Management. So these guys specialize in direct equities and have for 10 plus years. So this letter that comes out from North in the next week or so, when you receive it, have a read through. It's going to talk about the changes. It's going to show you what the investments look like. It'll have the costs comparing the current portfolios to these. The good benefit of having direct equities is there's no management fee once they're purchased. So we've been able to get a reduction in your ongoing fees from anywhere from 12 to 32%. So if you're on a moderate portfolio, it's about 12% reduction. High growth, it's about 32, and in between for, say, balance is around 21% reduction a year. So if you've got $1 million in our balanced Weinberg portfolios in your super or pension account, guess what? It's about a $2,000 a year saving in product fees moving forward and investment management costs, which is awesome. Now, that letter does state that you receive from North. It states the investment management fees increasing. That is true. Elston do charge more than what Zenith have been charging, but the total portfolio, including their cost, is reduced. Okay, now, what we've been able to do, because we've got scale, we've been able to negotiate and get a 4-month fee waiver from Elston. So for the first 4 months, they will not be charging their fee at all. And that will more than cover the transaction costs to change and buy these shares, for example. Okay? Let me put that in context. It talks about buying direct equities and listed assets in that letter. And there's a 0.1% trade cost to do that. Let's say you do have a $1 million portfolio in balanced. The balance probably got about 35% in Aussie shares, so maybe about $350,000. 0.1%, it might cost $350 to $400 to buy all those shares, but not paying their management fee for 4 months, it's probably about a $1,200 saving, okay? Or $600 saving, something like that. So significant, so you won't be out of pocket there, guys. So going forward, be cheaper ongoing. Little cost to get set up, but that'll be covered by the 4-month waiver of their cost as well. Okay, so have a read that letter. If you've got any questions, let me know. This is what the portfolio looks like currently. So this is physically what you guys will have owned in your super pension investment accounts. So outside of this, international shares, property, and bonds and so forth, fixed interests are still going to be managed funds or ETFs, but the strange share portion will be physical listed strange shares like these. So you can see some big names there: Telstra, Westpac, Nine Entertainment, Ramsay Healthcare, Car Sales, ANZ, A2 Milk. So there's probably some big brands and names that you know or have used. This is what your physical stocks will be in your portfolio moving forward. So some of the key benefits quickly to talk about. Direct transparency, right? So you physically see these in your portfolio. So when you get your reports or you log into North Online or whatever platform you're in, you'll see these stocks listed, okay? Number two, reduced fees, as I mentioned, anywhere from 12 to 32% per year reduction. Corporate actions, Elston manage these for us. So if there's a buyback offer or an IPO, or there's a special offer for existing shareholders to buy more shares or whatever it might be through CSL, for example, Elston manage that process for you guys. So that's all taken care of. Elston have a 10-year track record, so you can check them out online. They've outperformed the market for 10 whole years. They specialize in direct equities and managed portfolios like you guys have. They're the only company that we can find in the market that can show a 10-year track record. So you can check them out, but they've outperformed the market for the entire 10-year period, every year along. Reporting, so they're fantastic at reporting. So if they make a change, they do these little videos. So for example, car sales, they purchased on the 9th of January. So when they buy it, we go in there, there's a maybe 3 to 4 minute video on who car sales are, why they've brought it in and put in their portfolio, and believe it's fantastic purchase. Night Entertainment was done on the 7th of Feb, sorry. They're not stockbrokers. They're not going to be trading, selling and buying shares all the time. They're not about that. It's about long-term growth and returns. But, you know, when they see opportunity like a volatile market, there was quite a few changes they did around December, November, Jan, because the market was pretty volatile, and they saw a great opportunity to get into some certain stocks that they've been keeping an eye on for some time. Okay, but you might get 6 changes a year or something like that, but it's up to them how many, you know, stocks that they do buy or get out of for you guys. Forecasting yields is very important as well. So, you know, they can actually forecast all the yields for us too. So that helps with I guess, for us and for you guys for projections and running reporting. So, you know, if you look at your balanced portfolio and you've got, you know, with franking credits, they're suggesting it's going to pay about 4% yield for the year, which is good, not including the growth. So, look, this is fantastic. You know, we're really excited about it. It's coming out. So you'll start seeing these changes happen in your portfolio in the month of May. So you'll start seeing some stocks purchase. Don't stress. That's what it's about. It's a good thing. Read that letter. There's a second. If you've got any questions, do email me. I'm in Boston until the 8th of May doing this Harvard Business School. But when I get back, I'll either reply when I'm away. It'll probably be overnight because of the time difference, but I can give you a call when I return. But we'll go into a deeper detail when we physically catch up and have our forward planning meeting with you guys this year. So, but yeah, really excited to share this news with you. There's a second video I recorded. So I did go up to Elston's head office in Brisbane about 6 weeks ago and did a video with them. Watch that video too. It's an introduction to them, who they are, and a bit about their team as well. So get a good understanding of that. And but look, just wanted to say, you know, this is some great news coming out for you guys, something we've been working on for quite some time. So I'm really excited about it and looking forward to it, taking these portfolios to version 2.0 to the new level, and hopefully get better results and efficiencies for you guys moving forward. Thanks, guys, and let me know if you've got any questions. Bye for now. See ya.